right, making this video for my buddy Brandon. So Brandon, I said it's going to be about 10 minutes. Probably going to be longer, so I think you'll enjoy it. All right, disclaimer. This is not financial advice, my friends. This is educational and for educational purposes only. All right, I want to show you one thing real quick. So this platform is TradingView. A lot of platforms out there. There's two big ones. One is TradingView. The other one is TrendSpider. TradingView is kind of the big kid on the block. TrendSpider is just starting, but very good platform as well. So I'm going to show you what traditionally you see on a chart. Usually you have a white background. Usually you're going to have your green and red candles. Okay. And you have the cloud indicator here, which is my coded indicator. Okay. So let me just go backwards and put it back to how I had it. So the reason my chart is black is because white will kill your eyes. Second, I changed my red candles to orange because it's a known fact that red causes a difference in your psychological response when you see things. So red could mean, oh, watch out. And then next thing you know, you're not making great trade ideas. Okay. All right. So let's start out with my simple education here on the indicator. So this is my cloud. Okay. So the cloud consists of two moving averages, the 9-day and the 20-day. So what that means is that one average is the last 9 days of the stock closing. What price did it close at? What was the average for the last 9 days? If I see that going up on the 9-day, I know that the stock is trending up. If I see it going down, I know it's trending down. On the 20-day moving average, we will see the same thing. Now, the only difference is that Wall Street people that I've seen in interviews swear by the 20-day moving average. And let me tell you, they religiously say this is how they trade. So let me show you what they're talking about. All right, so I've taken off the clouds, which I'll come back to. But here you can see that this line is the 9-day moving average. So what that means is that for the last 9 days, we can see right over here, there's a label. You see that pink label, 1265.97. That's what the average closing price has been if we take the last 9 days. Each candle represents a day. This is the daily chart. I'll lower this so you can see merely 1 day. Now I can change that to a 4-hour chart up here. I can change it to a 15-minute chart, so on and so on. You can pick the time frame you want with TradingView. Okay, so now we see the current price is at 1231.56. Average is 1265. We're not above that. If we were above it, like here, okay, 9-day is the first indicator that we're going to have a bullish run. And so you see it there. Okay. So now this is the 9-day. So it's very simple. Let me show you what swing traders do. Now you can see here that the price stayed right on the line, right? So market makers do that on purpose so that you do not get in for a long because they want you to be scared. They want to take your money for a loss and move on. All right. So anyways, we have a move up here. If I take my ruler, my measuring stick, you can see it went up about $206, right? So we talked about Melly in the call. It's had a nice bull run there. Okay. Now, when it went under the line, right around here, I can see that it went down $178, right? So that gives me an indication like, wow, we're going up almost 200 every time or going down, right? All right. So let's go to the 20-day so you can see a little bit of a difference. All right. So now we have our 20-day moving average white line, right? And you can see Melly is at 1231. Okay. The moving average is 12.95, and we talked about this. Above 12.97 is where I think be a good entry if it does go above there. But you can see here, based off what we saw earlier, right? Okay, it's riding across. It was riding across the 9, but at some point here, if you look at the chart, this was a good entry. So let's say the only time I bought stock is if I see the price close above this line. Okay. And that's it right there. Okay. On the 20-day, this is why Wall Street, okay, they love this. They say, hey, I'm only trading off the 20-day. That's it. They've got a lot of investors they got to answer to, and that's what they do. All right. So let's measure what happened here. Okay. So this went up all the way up here, $450. So imagine if you owned 100 shares times $450. Exactly. This is why swing trading is profitable. You have to be patient. You have to wait. If you missed it here, okay, trying to buy up here is wrong. You don't have an entry. And this is what I teach people is do not go in unless you have a reason. Okay, now stock went down here and bounced right in here. It's another entry. I would have got in there. Okay. Let's say I bought here and I let it keep going up about $197. But let's say here, if it went under the line and I sold, okay, I see the top and I'll teach you how to figure out a top. It's $117, right? And take 100 shares or 2 call options that are 50 delta each. That's 100 delta times the move. Okay. So these are indicators that tell you what's going on with the stock. Okay. Now let me show you what the 9 and the 20 do when you pair them up together, which is what I use. All right. So now we have our pink line. We have our white line, 9 and 20. White line's the 20. Pink line is the 9. Okay. I'm going to turn off the candles. Because when I teach entries and exits, okay, I tell people you have to be patient. Who cares about the candle? If you're going to be a swing trader, why are you looking at candles? All I care about is moving averages. I want to know, is it going up? Is it going down? Is it going up? They're going down, and I prefer stocks with big ATRs. So all of these are entries for this stock, for this particular one. And I'll tell you what I do. Okay. So I'll set up a price note and say, okay, it crossed here on the way up. And this is what I consider a long entry, meaning bullish. So I'm going to put it in green. Okay, we're going up. And then I'll say, oh, here it's flipping down. So let's enter into a put here. And just for visual purposes, I'm going to put that as red so we know we're going down. Okay. Now, some people are going to say, well, hey, coach, I see something that you're not talking about. They didn't cross there. They didn't cross there. They got close. They almost crossed there. Oh, they crossed a little bit there. How come you didn't get into the stock there, coach? How come you didn't flip it? And I'll tell you why. Because if I manage this correctly, I'm up $388 times every share I own. I'm not worried about this right here. And there's another indicator that tells me if we're really going to flip. And I'll show you that in a second. But these are entries. These are real entries. All right. So now I'm going to look at the next bullish entry, which was here. And that's 1185. Okay. And it climbed up. And then I had a total reversal here. Went down. Didn't go down for a long time, but it went down. So I'm going to stay religious, okay? I'm going to stay the course with my standard work. And whoops, sorry, wrong one. I did the wrong one twice. Okay. We're bullish here. No, I did it right. Sorry. There we go. We're bearish. And then we went down and then we went up. So a couple entries there. So let's mark those off. Another entry there. All right, 12.58. Cool. $8. No biggie. And I'll show you why it's important to continue to do this. Okay. Okay. Here we go. Now we're headed on the way down here. We jumped into a bearish trade. Now, well, coach, is what I always hear. You're not going to make money here. You're absolutely right if you don't get out on time, right? But you're going to have a stop loss. Let's say you took a loss for, I don't know, $300, $500, okay? My question to you is like, how much money did you make here? How much money did you make here? How much money did you make here? Let me see. How much money did you make here? And how much money did you make here? Okay. You're talking about $100 moves on each one. Just buy one option for $50 on Melly. That's it. And chill. Let it go down and you'll see what happens. Maybe I lost this one, but I got 1, 2, 3, 4, 5. I'm winning 4 out of 5 times. I think in the percentage world, that's 80%. 80% win rate. And of course, I'll let you do the math. At some point, you can figure out, okay, what was the percentage on each trade? What were the dollars? What did I make? Don't want to continue with this lifestyle. It seems so hard. I'm just kidding. All right, so let's get our candles, borders, and wicks back on. And now we can see what I'm talking about. Now, this is a lot of noise, right? But you understand it. You understand the concept. Like, I'm entering a trade when the 9 and the 20 cross over. When it crosses back, then that means we're going the other way, so on and so on. Okay. All right. Got rid of the EMA lines, but you still have them in a cloud form. Okay. So you can see here when we cross, EMA cloud is thin, and as it progresses, it thickens out. What does that mean? When it gets the width, that means that the original 9-day moving average is moving away from it. Okay. I'm sorry, the 20-day moving average, right? And the 9-day is here. It's closer to it. Now, this is extremely wide. So you know, man, I'm in a good trade right now. At some point, I have to decide, where do I set my take profit? And I'm going to tell you where you take it. Anywhere you want. Okay. You got to set a limit and say, cool, this works. Here's where I sell. As you gain more reward money, then you say, I'm going to wait more, or I'm going to invest more here and sell here. If I wait till here, that's because I've made a lot of money in the past. Okay. Don't wait so long. At some point, set a stop loss and say, here's where I'm selling my trade. Okay. If you get this run here, perfect, no problem. Okay. You have to understand how much the stock moves daily. Can it move back down to where I started? And I'll teach you that in another video. All right. So now we have Melly with the 9 and 20, but it's in a cloud form. Okay. This is my own personal indicator. I created this. I coded it. Chat GPT helped me out. It was a fun time. All right. Boom. There you go. You like that, right? Simplicity is the best when you are investing. And I'm using Melly because we talked about Melly. Look at that. Cloud turned orange, then green. Went up. Okay. Here we got a little orange, but I decided I wouldn't flip it because I've been profitable since down here. Now, here I would do it for one reason, okay? There's another indicator that will tell me this is really turning, and I'm going to show you. I'm going to open up the other indicators and you will see what I'm talking about. And let's just go ahead and move these down so you can see just this one here. This is the MACD. Okay. So the MACD tells you when the price is going up. You see the flip there, 2 lines, just like the 9 and 20. Flips down, that means the price is going down, right? So on and so on. And it'll keep going, then it'll come back, keep going, come back. Such an easy part-time job, right? All right, so let's look at this entry here. So we have a line here we can add. It's a vertical line, and when I add it to my indicator, or I'm sorry, to my chart, it'll go through every indicator. So let's look at what it looked like on the MACD. Okay, cool. See that MACD right there? It flipped. Okay. And it started going down. Okay. This is a good entry to get out of your profits and enter into a bearish trade. You might say, why not here, coach? What about here, coach? What about here, coach? Okay. Okay. Go ahead and do it. You still would have been profitable in every single one. Okay. Now, why do I do it here? Because confirmation doesn't happen until you're at the 0 line right here. See that label on the side? 0 line. So true confirmation is not given or accepted until you are here and you're going past your histogram bars. Okay. Now, if it's me, I'm going to stay in the trade. It's going down, but somehow the trade was making money, right? Well, there's a divergence problem sometimes with stocks. As the stocks go up and down, okay, it could look like it's not going up or down. But anyways, that's another video, guys. Okay, I'm going to show you. So if you look at the MACD, okay, you see down over here, when it started going up, the MACD started going up. And right in here, the MACD flip. I'm sorry. Yes, the MACD flipped downward, but the stock kept going upward. And it flipped again right in here. Okay. And right in here. This is what you call, and again, this is another video, negative divergence. That means that we're headed down, but up here, we're headed up. And at some point, the stock will do this. Boom. Take a nice fall. Okay. No biggie. But if I stick to my strategy, okay, on the daily, I'm only entering the stock when these clouds flip. Okay. What's going to happen to my trades as I swing trade? Excuse me. All right. So here we have 1, 2, 3, 4, 5 trades since January. All right. Let's look at last year. Last year, we would have had, let me mark this off. So that's 1, 2, 3, 4. Oops. 5. Oh, kind of about the same, right? Look at that. Did the same thing at the end of the year, right? You have a quick reversal. And whoa, look at this drop. All right. So now, sorry, that's 2021. That's fine. We can keep counting. All right. So we have get this one moved over. 2 more here. Quick trades. Now you have 2 here, right? But after this run, I would question the reverse on that with other indicators. So let's just mark this off. Now you can mark those off and say those would have been entries. Okay, fine. You might have made a little bit of money or broke even there. Okay. But look at the rest of the wins you would have had on the way up and the way down. Okay. Now I will mark off these other ones just for training purposes there, right? Quick reversals. All right, up and down, and might to make some money there. Now we have, since 2021, I've got 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. 8 in 1 year. So 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 last year. So 8 per year. Now, January. I forgot this one here. So now that was 9 the year before. So far in 2 years there you have 17 entries. Okay, now you got 1, 2, 3. And I want to make sure I got everyone. 1, 2, 3, 4. Oh, we missed that one. 5, 6. Okay. Seems like we're headed for 8 entries again. Interesting, right? The way the market does this, how often it flips over, all that good stuff. We talked about Fibonacci, wave patterns, sign lines, good stuff. Okay. So now you see, could I have been profitable in the last 3 years? Absolutely. Even if you just bought 1 share, you'd be sitting here today saying, wow, I have X amount of dollars in my account. All right. So we talked about how often does the stock market do this? How do we figure out entries, exits? I think we covered that. You can do this at any time frame. I recommend daily, okay, until you learn more and more and practice on paper trading. All right, so let's take a look at sign lines. All right, first I want to show you SPX. And you see these lines here. These are lines that I had marked off in the past. Over here, there were resistance because of what was going on. This was a long move up. So I figured at some point we're going to have resistance. If you see over here, I'll show you. So I'll look at previous resistance in the stock and then mark it off as it's going up. Okay. Had some there, so on and so on. So now I'm just going to get rid of all that stuff. And let's talk about sign lines. Okay. This is SPX. That's what SPX looks like. Okay. To everybody. Okay. After COVID, we took that big dump, right? Here we go. So it went up, pulled back, went up, pulled back, up, pulled back, up, big pullback, came up, another big pullback, so on and so on, right? And this is what people see on the daily basis. And then they say, wow, the stock looks like it's reversing, right? Beware. This is how you figure it out. Okay, make it easy for you. Pull out my magic marker. So when you look at a stock, one thing that tells you is going to stay bullish besides the clouds is when you have a higher high. Look at that. It closed a higher high. And then it went low, but then it came back up. It's higher than the previous high, right? Same thing here. Went low, pulled back. That's what they call it. Then high. And then, how do you know a stock's reversing if you're not using indicators? Lower lows. It's marking lower lows. Stock is falling and falling. Look at that. So I can tell where we are going in the stock if I just did the simple drawings, right? Let me show you an indicator that I think is Amazing for any chart. All right, this is an indicator called CM Williams. CM Williams is an indicator that goes bright green when the stock has found a bottom. So if the stock found a bottom, this will light up green, meaning that the stock is going to stop dropping and then it'll start going back up. Let's check it out. Indicator went up here. Look at that. All right. For this purpose, I'm going to get rid of all the drawings, get rid of the noise, and we'll do this. Indicator went green, stock went up. Indicator went green, stock started going up. Indicator went green, stock went up. Okay. For a short time, this looks like maybe 7 days, 8 days. Okay. Now, what do we see over here with SPX? Okay, it's been going up. We just got the indicator. The indicator's been on for about 6 days, looks like. What do you think the stock's going to do next? Well, let's take a look at it. There we go. So we have a high. We have lower highs here, which tells me the stock is going down. Okay. However, we do have the indicator, CM Williams, that turned on. The last time it turned on was here. And the up move was $205 on SPX. Okay, I'll stretch this out a little bit so we can take a look at it. Okay, 205. Let me get my magic arrow back up here. So that's what we got. Okay, we are potentially at a bottom, or we can see a reversal. Now let's test this. What other stocks are doing the same? Let's check out Tesla. Look at that. Tesla's got some green bars here. It started going up. See that? Came back down a little bit here. You got my price labels, which I need. But we'll remove them. Okay. The cool part about this, you can do back like Excel or Word. All right. So you have a green indicator, CM Williams, and then the stock started going up. Okay. So this is where it's beneficial to study. Every time I get a couple of indicators, right? How much does it go up? Okay. So let's take this one. It wasn't a big move, but $43. So then I would say the same here. Like, okay, where's $43 at? It is $279, right? We talked about it in the call. Might see that and then maybe more. Okay. So that's Tesla. We can look at NVIDIA. They got a bottom indicator. SPY, they got the bottom. Meta, Facebook, not yet. Okay, you're going to see notes on some of these because I keep notes on multiple stocks, especially the Magnificent Seven. Let's take a look at Disney. Yuck. Look at that all the way down. Disney is just one big yuck mouth. All right. Where is, here we go. Chipotle. Chipotle saw a bottom here, went up. Okay. But it is under our cloud. See that? So we don't have a reversal. So the best way, if you're going to do this, the way I enter a stock, okay, is I want to see it above the cloud, but when do I know the price is above the cloud? I look at these labels here. So you can see we have 1857.99, which is the last price, but our indicators show 1857, 1877. So that's your 9 and 20. Okay. So here I would wait for the price to go above 1877. And then I know if it gets there, we have a full reversal. Now, what do I do in those situations? Simple. I'm going to set a trade. This is what we talked about, where I'm not going to worry about, yes, I trade 1,000 at a time. Sorry. I'm going to set a stop and I'm going to do it 1877. So I'm just going to say, hey, you know what? I'm going to give it a little room to breathe. So I'll say 1888. I want to buy 1,000 shares there and I'll take profit when it goes up 200. I'll take a loss when it goes down to 100. So then I'll just set my order. Okay. And there goes my order. So now, okay, I'm saying to myself, I'm going to wait till it goes above that, because then that tells me it's really reversing, because that equals this green area here. Okay. Now if I take this and just open it up. Oh, let me change this so that you can see this didn't take my numbers correctly. So I'm going to modify it so you can see what I'm talking about. Okay. So we'll do the 200 and 200. Okay. Now all this is dependent on your risk, depending on where you want to be. Because with this platform that I use, it's simple. I can move this down. Okay. And for visual purposes, I'll show you what this looks like. Okay. I'll move it up a little bit. So this means that if I came back here and said, okay, Chipotle went up, last time it went up $67. Okay. Price is $18.88. Okay. I'm going to move it up, let's say $60, which would put me at about $19.48. So I'm going to cut it short about 48, right? That would give me a profit of $6,000 on 100. Originally I had 1,000, but we'll just use 100. So that gives me, if I buy 2 calls, 50 delta each, that's 100 delta. I'm definitely going to get a profit near there. What's the loss I'm willing to take if this doesn't go my way and it actually reverses? You can set that here and put it wherever you can stomach a loss. Okay. Again, if you're doing this, got to be a student and get the education on it. Okay. So here we have a swing trade, and this is how I would do it, because if I'm somewhere out on the road, in the airport, at work, I don't have time to be watching this going up and down on the daily minutes. So I'll do this. Okay. All right. There'll be more videos on indicators, but I want to show you one last thing, and that's the MACD. There's some people on Wall Street that swear by MACD just like they would on, or like they do on the 20. So here we have the MACD, and I'm going to share the screen here half and half, and I'm going to show you how they do it in Wall Street. And they make money because they're patient. People are not patient when they want to get rich. Okay. So you can see the MACD here. When it flipped, I'm going to add a line there. First time it flipped was up here. Okay. And then we had another flip up here. Okay. Now these are 3 examples. I'm going to add one more, which is this one here. MACD did its thing. Okay. So we know these lines are MACD flips. Okay. So now if I did it just off of MACD, I'll watch my stock do this, going across, spike up, and it goes down. Wall Street people have a lot of experience with MACD, and they understand, even though the MACD is going down, they understand the stock at some point is going to go down. Even though the stock looks like it could be going up, this is what they call negative divergence, meaning that at some point the stock's going to do that. Boom. And they'll stay in the trade. They won't get out. They're not losing money. It's not a loss until you sell it. So this is why they do this. Okay. So MACD flips is something that a lot of people practice. So you see here, MACD went up. It's actually the flip enters the trade before the cloud flip, which is good if you want to do that. On the way down here, they almost match together, right? And then in the past, let's look at that first one when it went up. Whether you use the clouds or the MACD, okay, that was a nice little run up, and so on, because you could take this and copy and paste it over to this MACD, right? It went down, came back up, but then it went down. Anytime the stock goes up, MACD is going down. It's what they call negative divergence. So obviously it's going to bottom at some point and it's going to be a sharp drop. And you can see that happen. And this is exactly when people start jumping into short because they know, ooh, I got negative diversions. I'm in. And of course, paper trading, this is how you get better. Do not use your own money unless you want to buy just one share. But anyways, I hope this helps figure out how we can add some more videos for you here so you understand what stocks are doing. Remember the sign lines, okay? Actually, we didn't talk about sign lines. My bad. All right, let's go into sign lines. So sign lines, okay, is basically what we talked about. It's a frequency, and it tells us how often that frequency happens, okay? And you can see that I have a blue line here that's 260-day frequency, meaning when the stock was up here or down here, it's going to take 260 days for it to come back down here, or 260 days for it to come back up here. Now, when SPX started falling, okay, after COVID, or during COVID, kind of after COVID, I should say. All right, so it started falling. It was on the biggest sign line, 974, or ended up staying there, I should say. And there it goes. And you see how it bounced directly off that line. And then it started challenging here, like it wanted to come down, and it did not. Why? Because people do things in patterns, and there's no way this was going to come further with no frequency that it can match. Now, eventually it gave up and then started dropping into the next sign line, okay, which is 260 days. And if it stays on this pattern, like I said, in December, there were like 4,600. Okay, there it is. November, December, this is what analysts are saying, 4,600. Have a few pullbacks and then it'll make it there. When will we get back to this level? If it stays on this sign line, yeah, we're probably looking at December as well, maybe January. I think February, because you're going to have pullbacks. Unless it falls into this sign line. Once it gets here, which is 4,600, and then it falls back down to this one, we'll be on the 637-day sign line before it comes back up to where it needs to be, but I doubt it. People are too hot for the market nowadays. But anyways, these are frequencies. Like I said, it's like a Ferris wheel. Here's my example for the course video. I'll share it with you. These are the measured course wheels. So when people want to learn sign lines, we can show them. This is our little Ferris wheel example, guys. Okay, that's my Ghost Rider. All right, I hope this helps, man. I'll keep shooting you videos and tell me what you think. Give me feedback, and then I'll shoot you a list of stocks that I think might be making a move. Take care.